Of the U.S. consumer. The investment committee is standing by to help navigate through all of that. So joining me for the hour are Joe Terranova, Stephanie Link, Malcolm Etheridge, and Bryn Talkington. So let's get a quick check on the markets right now. Overall, predominantly a down day, fractionally so, roughly 0.5% declines across the major indices. The Russell 2000 down about 0.25% on the day so far. If you talk about the way that things are developing right now, there has been this debate about whether or not this is a risk on, risk off, risk aversion type trade, or is this just one that's a rotation? And maybe that's where we'll start the conversation off today. Maybe with you, Joe. Is this in your mind? We've talked about it a lot over several weeks now. Is this a market that feels heavy to you, or one that just feels like it's cycling through and reallocating away from certain parts of the market into others?
Yeah, Dom, and great to have you here with us today. I think it's more rotational volatility than exit volatility, where everyone's looking for, the move to the sidelines and looking towards cash. With that said, though, the market does appear to be spinning and ultimately ending back up in the same place. I think where we are today is maybe a moment to kind of sit on your hands a little bit, assess the portfolio. If you don't have the exposure to energy, what are you waiting for? We've been talking about that now for the better part of the last 4 months. Get some exposure to energy. It's not just about the headlines that we see with Iran. It is the fact that energy is actually seeing the earnings growth and the delivering in that regard. So I think this environment that we're in is going to continue in the near term. There's a lot of conflicting signals, and it seems as though the story in 2026 is really about, underneath the surface, the elevated volatility relative to what we've been used to the last couple of years.
Stephanie, if there are that many mixed signals in the marketplace right now, it almost begs the question, is it the status quo going forward? Because the status quo has been a slow grind higher, not an exponential move or a parabolic move for the markets, maybe certain parts. But if there are that many conflicting moves happening and signs in the marketplace, do we just keep that slow, steady grind higher, or do you expect a churn for quite some time?